This is Matthew Kratter's Bitcoin University. Today I want to talk about how shipcoiners just don't get it. Shipcoiners are just altcoiners, or people who like crypto other than Bitcoin. And this is a follow-up to my video from a couple days ago called Bitcoin, the Carrot and the Stick. So I wanted to respond to a few comments that were in that video. This one from P114. I think we all need to be real with ourselves. Bitcoin has gone sideways since 2021. Adjusted for inflation, it's down quite badly. I'm a holder, but if something doesn't happen soon, I think many will leave. It's not serving its purpose. High growth stocks, Meta, Nvidia, etc. would have been a better play. Now, I think there are a couple problems with this comment. The first one is, why is this commenter assuming that everyone who owns Bitcoin bought the exact top in November 2021, when in fact anyone who's been constantly dollar cost averaging over the past few years has far outpaced both CPI inflation and real inflation, which is probably much closer to 8, 9, 10, 12, 15%. If we take a look at this dollar cost averaging calculator, we can see that if you bought $10 worth of Bitcoin every week, beginning even at the peak of Bitcoin, when it peaked in the last cycle on November 8th of 2021, that was the highest closing price up until that point. And if you did this up until the present, you would have invested a bit more than $1,500. You would now have a bit more in terms of purchasing power in fiat, a bit more than $3,000, and you would have increased your holdings by, or your purchasing power by, 107%. So you far exceeded the CPI inflation rate or any other inflation rate. The other part of his comment about how you could have just owned Nvidia or Meta instead and outperformed, this is a great example of hindsight being 2020, having 2020 vision. Hindsight trading allows you to make billions and billions of dollars every year in your mind. Unfortunately, it's not a critique of Bitcoin to find something that's outperformed Bitcoin over a certain time period in the past. That's just 2020 hindsight trading. What is actually extremely difficult is to trade stocks or crypto in such a way that you're able to outperform Bitcoin over long periods of time after accounting for capital gains taxes. That's what's very difficult, and you'll notice that most crypto traders don't have any money at all. They're not the billionaires of this world. If you're enjoying this video so far, I just ask you to help to support this channel's mission. Hit the subscribe button. That really does help this channel with the YouTube algorithm. Hit the like button, leave a comment, question, suggestion for a future video, and share your video with a friend or family member. So while some crypto traders jumping in and out of the latest crypto, trying to find the fastest horse and then get out in time before the horse crashes and then find the next fastest horse, this is extremely difficult to do over extended periods of time. You might be able to do it for a couple of weeks or a couple of months or even a year. There's just a certain amount of luck involved as well, but you will not be able to find the fastest horse over long periods of time. And so while crypto traders are doing this, Bitcoiners are just humbly stacking and hodling, focusing on creating real value for the world that will earn us either Bitcoin or fiat that we can convert to Bitcoin. There's another problem with comparing stock returns to Bitcoin's returns, and it's not just hindsight bias. Bitcoin is a very different kind of asset. It's a bearer asset with zero counterparty risk if you hold your own private keys, so if you hold it in cold storage on a hardware wallet. By contrast, tech stocks and all stocks sit in your brokerage account, and access to that account can be turned off at any time if someone in the company or government decides that you're a bad person, or if there's a crisis, a financial crisis, a political crisis. Banks, brokerage houses close all the time. Or the custodian may even lend out, rehypothecate your shares of stock, thus creating multiple layers of counterparty risk, not to mention the operational risk, the leverage risk, all these different risks that come with investing in stocks. By contrast, your Bitcoin can never be diluted, doesn't have counterparty risk, can never be diluted, unlike the shares outstanding of Meta or Nvidia, which can be increased and will be increased at any time. So Bitcoin really is quite different from equities or from stocks. Bitcoin is a one-of-a-kind unique asset because it has zero counterparty risk if you hold it yourself and zero debasement risk. By contrast, there's no way to hold a stock yourself. You could hold a stock certificate, but again, there's counterparty risk in terms of your being an actual equity holder and being recognized as such. Another similar comment from another shipcoiner called Well the Deal F9X. $10,000 or $35,000 versus $10,000 to turn into, I'm quite certain, $500,000 minimum. Again, he's projecting what his returns are going to look like. It's very unlikely that this person will have turned $10,000 into $500,000, but he's quite certain that he's going to make that much. Come on, man, don't be stupid. Bitcoin does not win versus altcoin opportunities when you get into them early. Who cares what the technology can do? This is all speculative, and cryptocurrency is a get-rich-quick scheme, and it started with Bitcoin. This technology isn't needed, never was needed, and this is a multi-level marketing opportunity to get in at the bottom while other people who get in on top of you add value to your taken position. That's all crypto is. And it turns out he's a Caspa investor, or a Caspa trader, I should say. This is a typical nihilistic shipcoiner. He is right that most crypto projects function like MLM or pyramid schemes, but Bitcoin is a quite different animal. There's no pre-mine or original insider allocation. There are no VC investors. There's no project leader who keeps dumping on you like Vitalik Buterin or possibly the founder of Caspa as well. There's no living, active founder who has a huge allocation. Unlike Vitalik, Satoshi has never moved or sold any of his coins. So Bitcoin is very, very different from crypto. It's a digital commodity. It's not some centralized project. And Bitcoin has very unique properties as well. Bitcoin gives anyone the freedom to transact economically with anyone else in the world without needing to get permission from a banker, a tech company, or regulator. Bitcoin mining helps to balance the grid and incentivize the build out of new electrical infrastructure. Bitcoin helps to monetize stranded energy and reduce methane emissions. Bitcoin is also a life raft for those in weak currency regimes, and all fiat currency regimes eventually end up becoming weak because all fiat tends towards zero in terms of purchasing power over long periods of time. Bitcoin is also the best solution for international remittances. Bitcoin is the best solution for global micropayments. Bitcoin is the best treasury asset in the world for families, corporations, and nation states. There's really at this point this vast chasm between Bitcoiners and shipcoiners. They become almost like different species at this point. And so there's this mutual incomprehension, or it's really more of a one-sided incomprehension where shipcoiners just don't understand what this is all about. Instead, they remain just degen traders, and they end up gradually getting poorer and poorer versus Bitcoiners who hodl. So there's a sort of financial Darwinian evolution happening as well. I also wanted to answer two follow-up questions here. There was one comment from Gabor JN9ZC. I don't think there's any such thing as pulling money out or putting money in any more than there's a concept of cash on the sidelines. Whenever someone buys, someone else has to sell. The amount of US dollars in Bitcoin remain the same. He's referring to my statement that money was leaving the fiat financial system, or value was leaving the fiat financial system and entering the Bitcoin system. So my response to his comment there was, it's true that when someone buys one Bitcoin, someone else or a few people have to sell one Bitcoin. There's always buyers and sellers on each side. But it's also true that the purchasing power of one Bitcoin has been moving up massively over the past decade, while the purchasing power of one US dollar has been falling massively over that same time period. The amount of US dollars does not remain the same over time, since more is constantly being printed by the Fed and commercial banks making loans. So that's a key distinction as well. Also a comment here, or a question from CCII9HG. What if the government told companies like Unchained, which offers a collaborative custody, a multi-sig solution for consumers, what if the government told companies like Unchained to not let you send your Bitcoin out at all, or without withholding a certain amount of it, for example, as a withholding tax, exit tax, whatever the case may be? The response to that is that there's nothing that Unchained can do to stop you from taking your Bitcoin out of their vaults, out of their collaborative multi-sig addresses, since in this setup you control 2 out of the 3 keys, and this is the quorum here is 2 out of 3. So if you have the 2 keys, it doesn't matter what the US government says or Unchained says, you can withdraw your money from their collaborative vaults. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.